Sassman here with Century 21 Affiliated. That's Scott Swinford with Hancock Mortgage.
Hey, Rich. Hey, everybody.
It's another Mortgage Ship Monday, the best part of every Monday. So, in this episode, I've been getting a lot of people asking, should I wait to buy a home? Because inventory is pretty low right now. And, of course, you never know what the future's going to hold. But we do have some projections to help you make that decision. And Scott, what are some projections that you're seeing out there for the upcoming spring market and whatnot?
Well, Rich, I'm glad you asked. We actually have a real estate report card here, and I just pulled off for both Lake County and Porter County.
Awesome.
So it gives just a little bit of an idea of kind of what's out there. There's some demographics and some things in here I'm not necessarily going to go over, but this is what I find really interesting. So in Lake County, the median home price is $165,845. Okay, so what they're expecting over the next 5 years is a cumulative increase in value by 18.37%.
In how many years?
In 5 years.
Wow, 18% in 5 years.
So what they're saying is, if your home is worth, if it's right at the average, right at the median, if it's worth 165.8, in 5 years they project it would be worth 196.3.
Wow.
Now that's an incredible number. Now understand that, the county's going to be a little bit different. Each county is going to, in Indiana and Illinois and all the other states, are going to be a little bit different. But that is just sort of what they're showing is the historical average here, just to give you kind of an idea of where we're at. Historical average over the last 60 years, it's increased 3.4%. The last 10 years, 2.6% essentially, and the last 5 years, 4.9%. But now they're thinking that the next 5 years, 18.37%.
And what that tells me as a realtor is the experts are projecting that we're going to have stability, and we're going to be able to maintain what we're going through with housing growth. Home sales are at an all-time high. It seems like inventory's at an all-time low. I mean, last time I looked, the Four Seasons for single-family homes, it was in the single digits for amount of listings. So that's right down the road here. And just Crown Point and everything in general in Lake and Porter counties is super low right now. So they're projecting that for the most part that's going to continue through this year at minimum. And interest rates are expected to stay below 3-ish, somewhere in that range.
Well,
so they're not talking about a huge jump.
Right.
So
yeah, we got to be careful with that one, though. I know the Fed,
it's always a loaded question.
Well, and you're right, it is, because a lot of things you got to understand that interest rates are based upon bond rates,
yes,
which are somewhat reflective of the stock market as a whole. And there's just been a lot of really goofy things going on within the last couple of weeks. Most of it, I think, politically charged, just because of the election and what's been going on within the U.S. And so rates are actually, today is the first day they've actually started to go down a little bit. The last several days they've been going up, and quite a bit. So we're kind of seeing that. But again, it's more emotional than it would be. That's the word I want to use. We don't expect them to go up. Normally the interest rates are held down by the government. They are falsely I shouldn't say falsely, but they are intentionally holding down rates. And what they're thinking is, well, because it stimulates the economy.
Yeah.
So what they're concerned about is that with the new administration comes in, and they start spending a lot of money. They start giving out money for the the $2,000 stimulus. If they start paying off the college loans like they've been talking about and things, that could have an effect and cause us, with more money out there, cause us to go into start to see inflation. And inflation is the arch enemy of low interest rates.
Yes.
So there's a lot of things that have been happening, and I'm sure will continue to happen. But I think the overall thoughts between the people that I know, trust, and respect
Mm-hmm.
is that we are going to continue to still have decent interest rates for the rest of the year. They may go up a little bit, but it's all in your perspective. The average interest rate over the last 40 years has been like 7.25. So when we see these rates that are in the twos or in the threes, they're still extraordinarily low between the average. It's just, we just came off a period where they were the lowest in history.
Yep. And to piggyback off what you're saying, um, consumer confidence in home buying, NAR just put out the stat. The year after a presidential election, going back to the 1950s to now, has always been the strongest year for real estate out of the 4 years term. So you can buy with confidence, knowing that things tend to stabilize the year after an election. So no matter who's in office, it doesn't matter. It's just overall, everything just tends to get back to normal. I want to say, and there's nothing normal about this market. So in order to win, the house in a multiple offer situation, you need two things. You need an awesome pre-approval from an awesome lender. That's where Scott comes in hand. You're going to have a super strong pre-approval that with a chance that Scott usually, if everything goes well, closes under the industry normal for the time period. So that's always a good negotiating tactic. Saying, hey, we have a lender who does things on time as long as the client does things on time. So a little asterisk there, but as long as everybody does their stuff on time, his company is streamlined. That's why I love using him. Not to mention all the knowledge that he brings to the table. And the other thing that you need to win in a multiple offer situation is a strong realtor. And I'm right here for you. I don't like to lose, and I'm going to make sure we put our best foot forward, and we're not going to play games. I'm going to find out what it takes to get you into that home, and whatever it takes, as long as it's feasible for you and for the loan to go through, we're going to do it.
Absolutely. And we keep saying it just about every Monday video is that it takes a team. We're a team, and we all have to work together. So, Rich, let me just throw this out there to you really quick, too. We talked a little bit about Lake County. We said Lake County median home price about $165,800. Porter County, $191,200. So the average cost per square foot, Lake County is $121. Porter County is $133.
Yeah, and in general terms, Porter County also has a little bit lower taxes too, property taxes. So you can you higher median average and paying a little bit lower in taxes on average.
Right, exactly. So, and we talked Lake County. They forecast in 5 years 18.37% appreciation. Porter County 18.7%, so a little bit more. So if you look at the 5 year, again, if your home is worth the median, the 191.2, they suspect in 5 years it should be worth just shy of $227,000.
Yeah.
So it's obviously a good investment. And the nice thing about investing in real estate like this is, one, you get to live in it, and two, it's an appreciating asset. So unlike a car, when you buy it and drive it off the lot, you lose thousands of dollars, and it's not worth as much 5 years from the time you buy it. With real estate, for the most part, and again, we can show you here that the 60-year average, it's always increasing in price, and in value.
Yeah, and so let's also pinpoint. It's a great time to refinance a house if you're in a house that you absolutely love, that you're not going to move from. Then you know what? Start thinking about refinances, because even if you if you bought your house 4 or 5 years ago, and let's just say you just made payments that just covered the interest, even though that's not really how it works, but let's just say that's all you covered and you didn't pay down any principal on your house. Well, with the appreciation that we've had in value over the past 3 to 4 years, you may have that 20% equity in the home to get rid of PMI, which can drop a lot off your monthly payment.
Right? Yeah, we're showing like I said in Porter County, the 5-year appreciation has been almost 4.4%.
Mm-hmm.
So even if you never made a payment towards principal, which we're not writing interest-only loans anymore, but even if you didn't, again, over 5 years, you're looking at 4.4%, and that's accumulative. So you can't multiply those two together
Mm-hmm.
because it's 4.5% of the increased 4.5% from the year before. So the numbers are work. And Rich, I'll be really honest with you. Now is a great time to refinance. Even though I said rates have kind of trended up just a little bit over the last several days, there's a lot of reasons to refinance,
Mm-hmm.
and it's not just to get a better interest rate.
No.
There's still folks out there that have rates in the fours and the fives, and I was just talking with someone the other day who's got an interest rate in the sevens. So it makes an awful lot of sense to do that.
Mm-hmm.
But the other thing too is to be able to use some of that equity in your property to pay down some other bills, to lower your monthly payments and to help build your wealth by doing that. Now, we talked about this before. I do not believe, under any circumstances, you should use your house as an ATM machine.
Nope.
You should not. But there are times where it makes sense to use some of the equity that you have in there to pay off auto loans or credit cards.
You
or
mean
things
my
like
20% interest credit card I should replace with a 3% mortgage?
Exactly.
That sounds like a great deal to me.
Yeah, and it's more than just that. And
Oh,
usually when I say that,
oversimplifying.
well, but on the surface, some people will say, well, why would I want to extend my credit card payment out over 30 years?
Mm-hmm.
If I absorb that into it, why would I pay? Because I'll have my credit card paid off in 3 years or 4 years.
Mm-hmm.
Why would I want to pay it over 30 years? And that's the genius behind it, because if you take the payments you're making now, let's say you've got $1,500 in mortgage debt and $500 in credit card debt, and you can refinance and it's costing you $1,600. Take that $2,000 that you were paying and pay it down on your existing mortgage.
Definitely.
And not only will you find out that you gain equity much quicker, you'll pay your house off much quicker by doing that. And it's the same exact monthly payment.
You're not going to feel
that you were
any more
making.
strain, anything. It's just your normal life. Or if you want to put some money back in a rainy day fund, which everybody should have a little rainy day fund. So in case we go through another pandemic.
Right. But you're absolutely correct though. There are a lot of reasons to do that.
Mm-hmm.
It's not, I heard someone the other day that said, well, they said I should refinance if I can save at least 1%. I said, well, that made sense a while ago, and it really does. But this is part of kind of a holistic financial planning for you of using your mortgage and using the equity there to pay off other debts and to build wealth in the future. But it's, Rich, you and I've had the conversation in the past, and I do with clients all the time. There's some folks who just wouldn't sleep well at night if they consolidated all their debt like that into their mortgage, and that's perfectly fine.
Yeah.
And
You have to do what makes sense for you.
Right. We want to do what's comfortable for you. But we can sit down with you and at least show you, take a few minutes and show you some of the benefits, the pros and the cons to doing that, and then show you the results down several years later. So we want to make sure we're taking advantage of this low interest rate environment. And again, even if they do go up a little bit, it's still far, far lower than what our average is.
Yeah. And that's the thing. We have these projections from industry experts. We have hard numbers from the past couple months giving us these projections, but nobody has a crystal ball. Nobody knows what's going to happen the day after tomorrow. Nobody knows what's going to happen tomorrow. But so is it a good time to wait? I always have to say no, because you never know what's going to happen. But at the same time, you got to make sure that if you need that couple extra months to save up more money in your bank account, that way you can pay for movers, buy a new dishwasher, whatever you want in your new home, then that 100% makes sense to wait. But if you have the means and capable of buying now, even with this low inventory, there's also more people discouraged and that are not looking at houses now that are saying what everybody else is saying. Oh, we'll just wait for the spring when more listings come up. So you're going to be in just as heated, if not even more, competition once it warms up. So,
and anything can happen, and it's really hard to say. Again, my crystal ball is broken. I listen to the folks who understand the market, who know what's going on, who can kind of prognosticate. Is that the right word?
Prognosticator of all the groundhog.
Yes.
The prognosticator of all. Yeah.
Yeah.
I can't say it. I could never be one of those guys that has to read the scroll.
Exactly. Who can forecast what's going to happen? How's that? And they're usually pretty good. But I'll tell you what. If you would have asked me a year ago if I was going to be sitting in my house for several weeks and that we were going to all be wearing masks right now this time of year, unfortunately we're not. We're separated far enough, so we're socially distancing. I would have said no. It was crazy. And if you'd asked me a year ago if we were going to see rates that were in the twos, I would have said, "No, seriously doubt it. I don't think that's going to happen." So you never know what's going to happen or what the future is going to bring. So at least if you're thinking about buying this year, although you may not need to necessarily want to buy in the next week or 2 weeks or month, at least kind of let's formulate a plan to help you out so that when you are ready, you know what to expect and you're ready to move forward. And there's not going to be any speed bumps in the road when you finally decide that you want to move forward.
Yeah, we're not seeing any red lights. The number one thing that I get at open houses right now is, well, why buy right now when the market's gonna crash? It's because everybody's thinking of 2008 when everything was going so great and then everything crashed. That was caused by a completely different reason, and those reasons they're not even allowed to bank that way anymore. so there's no way that reason's gonna happen anymore. And people did see writing on the wall back in '08 and everything, and there's a lot of people getting out. But there's no warning signs, and trust us, we look for them because that affects our livelihood. That affects us taking care of our family. So we make sure we look for those things, and if it's not good for our clients, we're not going to let them do it. That's what it comes down to.
Right. Yeah, you're correct. In 2006, 7, and 8, when we had the whole housing crash and the recession, it was because of the housing industry. The housing industry got weakened. That is absolutely not what's happening right now. The housing economy, the housing industry and the economy is what's keeping things moving forward.
Yeah. We're like a steel beam in our economy right now. We're the ones holding up the economy right now. We're by far the strongest segment, and that's helping our country grow economically right now, or at least not lose pace. Okay. So, luckily we've been able to continue our jobs the entire year, and that's been able to keep everything going, keep people in homes, keep people getting into homes. Because last point I want to make, and it's a pretty obvious one, at least in Northwest Indiana, it's always going to be cheaper to buy a home than rent a home that has a mortgage on it. Because guess what? That landlord wants to make money, so your rent's going to be a couple $100, if not more, higher than what your what your mortgage payment would be. So.
And not only does your landlord want to make more money, they need to charge you more because of the way what the property taxes are here in Indiana.
Instead of 1%, it's 2%.
Right. When you own your home, it's generally capped at 1% of the value. When you are an investor and you're renting the property out, it's not your own personal property, it's capped at 2%. So the property taxes are much higher on the rental, and guess who's paying that? You are. When you rent the home, you're paying the extra property taxes.
You know what? Let me look right into the camera right now and talk to all my Illinois friends right now that own homes. We're capped at 1% of your home's value. If you own a $300,000 home in Indiana, you're paying $3,000 in property taxes, or less most times. So, how much are you paying on that same price in Illinois? Welcome to Indiana.
Right. And if you live in Illinois and you've been watching the news, there's a lot of talk about what's going on within the legislature there regarding the police officers and their liability and things. And we're going to start to see more people that are moving to Indiana from Illinois. In fact, Illinois was one of the top 3 states in the country over the last several years that have lost people. And when they did the census, they said there are people that are moving out of Illinois. And Indiana is one of the 3 states mostly that those people are going to. So think about that. Just consider that as this goes on, and Rich has been telling you about, making sure that you're making good, solid offers. And one of the reasons that's driving this price is people from Illinois that are looking to move to Indiana that can get lower property taxes, generally lower cost of living, but yet still commute to Illinois for their higher paying jobs if they work in those areas. So something that you need to think about, but talk to someone who is an expert in that field to help you make those decisions if you're thinking about buying a home.
Yeah. I mean, I just rented out a property that for $3,000 a month was the rent. And just in general, you could have got a much bigger house in the neighborhood if your mortgage payment was $3,000 a month.
And it was a beautiful home.
Oh, it was gorgeous.
Very nice home.
We're both there for the open house.
Right, very nice home.
Yeah.
However, when you own it, not only would you generally be paying less every month, but you're also building equity, so that property is going to be worth more when you go to sell it several years down the road.
Yeah, it's always nice to have that safety net of appreciation in your home. So, but other than that, if you don't know where to start with the mortgage process or with buying a home, selling a home, if you are 6 months out, 12 months out, or 3 weeks out, it doesn't matter. Give us a call and we can put you on the right path. So that's why we're here. That's what we want to do for you. I mean, we've been working with some people for over a year, and to get them in financial shape to be able to buy a home. And we would love to do that for you. So feel free, give us a call, message me on Facebook, whatever it takes to get in touch with us, do it. Other than that, that's Scott Swinford with Hancock Mortgage. I'm Rich Sassman with Century 21, and I hope everybody has a great Monday.
See you, folks. Take care. Talk to you soon.